Have you ever stopped to truly consider what happens to your money when you hit send on a digital transfer? It zips across networks, passes through servers, and lands securely in another account. But how? How do banks, especially modern ones like Roger Bank, ensure that sensitive financial data, your hard-earned money, doesn't fall into the wrong hands during this invisible journey? It's not magic, it's a sophisticated dance of advanced security measures and, most importantly, robust encryption. In today's hyperconnected world, where digital transactions are the norm, understanding the underlying security mechanisms isn't just for tech enthusiasts or cybersecurity experts. It's crucial for every single one of us who relies on online banking. The peace of mind that comes from knowing your money is truly safe is invaluable. And when it comes to platforms like Roger Bank, which prides itself on modern financial solutions, their commitment to transfer security and encryption is a cornerstone of their service. So, let's pull back the curtain and explore the fascinating world of digital bank transfer security, focusing on how Roger Bank tackles this critical challenge. We'll delve into the foundational principles of data protection, dissect the types of encryption that stand guard over your transactions, and examine the various layers of security Roger Bank employs to keep your financial life secure. The foundation of trust, why security matters in banking. Before we dive into the specifics, let's reinforce why security is paramount in the banking sector. Financial institutions are, by their very nature, custodians of our most sensitive data, our money, our personal information, our financial history. Any compromise could lead to devastating consequences, from direct financial loss to identity theft and eroded trust in the entire financial system. Banks face a constant onslaught of cyber threats, phishing attempts, malware, ransomware, denial-of-service attacks, and sophisticated social engineering schemes. The stakes are incredibly high, which is why banks invest heavily in cybersecurity infrastructure and continuously update their defenses. For a digital-first bank like Roger Bank, this commitment is even more pronounced, as their entire operation relies on the integrity of their online systems. One of the foundational assurances for any bank in the U.S., including Roger Bank, is FDIC insurance. Roger Bank's deposits are FDIC insured through Citizens Bank of Edmond. This means that even in the highly unlikely event of a bank failure, your deposits are protected up to the legal limit, typically $250,000 per depositor, per insured bank, for each account ownership category. While FDIC insurance covers the existence of your funds, strong security and encryption are what protect your funds during transit and from unauthorized access. The unseen guardian, understanding data encryption. At the heart of secure digital transfers lies encryption. Think of encryption as a secret language that only the sender and the intended recipient understand. When you initiate a transfer, your sensitive financial information, account numbers, routing details, transfer amounts, is translated into this secret language, becoming an unreadable jumble of characters. This jumbled data is called ciphertext. Without the correct key to unlock it, this ciphertext is meaningless to anyone who might intercept it. There are two main types of encryption commonly used in financial transactions. Symmetric encryption. This method uses a single key for both encrypting and decrypting data. It's like a locked box where the same key opens and closes it. While highly efficient for encrypting large amounts of data, the challenge lies in securely sharing that single key between the sender and receiver. If the key is compromised, the entire communication is vulnerable. Examples include Advanced Encryption Standard, AES, often considered the gold standard with key lengths up to 256 bits, and Triple DES, 3DES, an older but still used method. Asymmetric encryption, public key cryptography. This method uses a pair of keys, a public key and a private key. The public key can be freely shared and is used to encrypt data, but only the corresponding private key can decrypt it. It's like having a mailbox with a slot that anyone can put a message into, public key, but only you have the key to open the mailbox and read the messages, private key. This solves the key sharing problem of symmetric encryption. RSA and elliptic curve cryptography, ECC, are common examples. ECC is particularly gaining traction for its strong security with smaller key sizes, making it efficient for mobile devices and resource-constrained environments. In a typical online banking transaction, a combination of both symmetric and asymmetric encryption is often used. Asymmetric encryption might be used to securely exchange a symmetric key, which then encrypts the actual transaction data for faster and more efficient transfer. Roger Bank's multi-layered security approach. Roger Bank, as a modern financial institution, doesn't just rely on a single layer of security. They employ a robust, multi-layered approach to protect your transfers and overall account security. This comprehensive strategy addresses various potential vulnerabilities from the moment you log in to when your funds reach their destination. Let's break down some of the key elements of Roger Bank's security framework. 1. Strong encryption protocols for data in transit. When you initiate a transfer with Roger Bank, your data doesn't travel naked across the internet. It's wrapped in strong encryption. This typically involves transport layer security, TLS, the successor to SSL, which is the standard security technology for establishing an encrypted link between a web server and a browser. You can often tell if a website is using TLS by looking for https:// in the web address and a padlock icon in your browser's address bar. This ensures that any information exchanged between your device and Roger Bank servers is encrypted, making it incredibly difficult for anyone to intercept and read. While specific encryption algorithms employed by Roger Bank are proprietary, it's safe to assume they utilize industry standard, robust algorithms like AES-256 for symmetric encryption of data packets, and strong asymmetric algorithms like RSA or ECC for key exchange and digital signatures. The goal is to ensure that even if data is intercepted, it remains unreadable without the proper decryption keys, which are securely held by Roger Bank and the authorized recipient. 2. Multi-factor authentication, MFA. Your password, no matter how strong, can be compromised. That's why Roger Bank, like other leading financial institutions, heavily relies on multi-factor authentication, MFA. MFA requires you to provide 2 or more verification factors to gain access to your account or authorize a transaction. This adds a critical layer of security. Common MFA methods used in banking include something you know, your password. Something you have, a code sent to your registered phone via SMS, a code from a hardware token, or a push notification to your mobile banking app. Something you are, biometric verification like a fingerprint scan or facial recognition. Roger Bank implements MFA to prevent common phishing and farming techniques. With that said, thanks for watching and until next time.